The world turns, and with each turn, a change. And each change makes it more complex, unpredictable, enigmatic. The world keeps turning. And from the Pellicer and Heredia practice, we anticipate everything that is going to happen. Brexit, artificial intelligence, new commercial borders, legal tech. The world keeps turning, and it commands the reliance on international lawyers who are capable of interpreting this new reality with integrity, honesty, and transparency, offering answers to so many new questions. Whatever it is, ask us. At Pellicer and Heredia, we know how.
Good afternoon, everyone. Thank you very much for joining us back today. And thank you to the panelists that today they're going to talk about financial advice. As you might be aware, we all depend at the end of the day on our pensions, our savings. And we thought it was very important to understand and have independent advice, have full knowledge of how it works, what the regulations are, what the qualifications, fees, etc., etc. And a lot of questions that as consumers, we need to understand. We all like to invest our money to have a return in the future, but we all need to be aware what could happen in a worst case scenario. And as lawyers, we always try to look into contracts. It is important to understand all the ins and outs about it, whether we've got a guarantee, whether it's a high risk, what kind of responsibility there is, and what jurisdiction, if there is a worst case scenario, should I take the case on. So today, I'm happy and very proud to introduce you today to an independent financial advisor, Tracy Storer from 𝐿𝐸. Hello, Tracy.
Hello. Hi.
Thank you. We know Tracy for many years, and the good thing from her and her team is they've been always transparent to consumers. And we really appreciate that. We've got on the other right-hand side, Pedro Heredia, international lawyer. Hello, Pedro.
Hello, Ignacio. Good afternoon. And hello, Tracy. And it's going to be good, obviously, something I think is extremely important to understand what should be the process in order to contract a financial product and what should be a guide. And we're going to obviously to learn from Tracy how this should be in order to do it correctly. You've said the word I like, transparency. Transparency is a word that normally when we, as barristers, we fight against banks, against financial institutions. Obviously, this is the word, one of the main words, pillars that a consumer, when you receive information, when you contract with a financial institution, a bank, for example, it should be the main pillar on that in order to understand what product are you contracting, what are the commissions, what are the costs, and everything. So it's going to be a fantastic webinar, and we are going to, every one of us, we are going to learn a lot from Tracy, I think.
Thank you very much, Pedro. Before passing on to Tracy, as I said, we've got if you click here on the bottom, those who are registered, you could chat and then you could send your questions and answers. We'll try to cover. Tracy's going to start the presentation. We're going to talk about obviously regulation, the license you need to have, etc., etc. And please send us your questions here, because it's important that we could cover within this hour the most useful advice and time. Okay, so I'm going to pass over to Tracy, and then we will do discussion later on. Over to you, Tracy.
Thank you. Thanks both. Good afternoon, everyone. So I'll just give you a very brief overview of myself and 𝐿𝐸. We are an award-winning company that offers investment and pension advice across the whole of the Costa Blanca, and actually the whole of Spain. I think COVID certainly helped us be more remote when giving advice, and that's really helped. So we provide advice across the whole of Spain. We have 2 offices in the Costa Blanca. We are a fully fee-based company, so that's really important, and we'll come back on the importance of that. But what that means essentially is that everything that we offer is fully transparent. The client knows exactly what they're getting into right from the moment that they meet us, and they understand exactly what they're signing up to as well. So transparency, I think, is what Pedro identified, and it's absolutely key when getting financial advice. We also hold the a MiFID II license, which is actually not as regular these days, but that's the highest level of license that you can hold when giving advice. We're registered with the 𝐶NMV and the DGS in Spain, and we offer regulated tax products to Spanish residents here, which is, I think, really key. So we only deal with Spanish residents as opposed to UK residents who might have a holiday home here in Spain. And we've got a team of advisors and also client relationship managers, so to support all of our new clients and also our ongoing clients. So that's just a little bit about Chorus. If you haven't already come across us, we write quite frequently in all of the local newspapers, and we have a clear goal, which is really to offer education to the general public, to try and help people understand what questions they should be asking when getting financial advice. Because sometimes if you don't ask a question, you won't actually find out the true answer. So hopefully this webinar will give you some very simple understanding and a really good grasp of how the financial service section works in Spain, and also what questions to ask and what to look out for.
Okay, thank you very much, Tracy. Will you please, how would you like to run this, Tracy? Would you like to start from the very beginning? Yeah.
So I think, look, one thing that I want to point out is that financial services doesn't have the best reputation in Spain, and that makes people quite nervous when they're going out to try and understand whether they should transfer a pension or whether they should invest money. It's, you know, it's very nerve-wracking, and you can only jump on the internet for 5 minutes to understand just what a bad reputation the industry has. So I think to take a step back, we need to understand how firms are regulated and how investors are protected, essentially. So there's something called the 𝐶NMV and the DGS, which are the registers here in Spain, where financial advice companies can register on those registers, and one's for pensions, one's more associated with investments. So certainly one thing that you can look at when you are getting advice from a financial advisory firm is that they are registered with both 𝐶NMV and the DGS in Spain. But essentially, we use something called passporting. And passporting is where we passport into Spain our regulation. Now, in the past, companies have been able to passport their FCA regulation, which I think is one that we'll all be really familiar with and probably quite confident in as well. As we know, the UK has a robust regulator called the FCA, the Financial Conduct Authority. And we're very familiar with that. Living in the UK, any advice we get is covered by the FCA. Any products that we may be investing are covered by the FCA. But when you move to Spain, that's very, very different. And actually, we're now part of Europe. And as we know, the UK aren't part of Europe. So we aren't unable to passport in any FCA regulation. So we looked for alternatives, and Chorus as an entity, we are associated with a larger, wider network called IASA International. And that is where we, for example, get all of our regulation through. And IASA, who are our network, have a UK-based office, which is fully FCA regulated, and a European office, which ours is from the Czech Republic. And we passport our MiFID II license into Spain out of the Czech Republic, and that's how our regulation works. So when you're sitting down with a financial advisor, yes, check that they're registered on the DGS and the 𝐶NMV, but also check what licenses they hold, what level of advice they're allowed to give. A lot of financial advisory companies here will have the basic, what we call an IDD license, which is almost an insurance license to give you advice on insurance products. But to actually have full advice, which includes all of investment advice, it's the MiFID II license that you should be looking for. So that hopefully gives you a better understanding of what to look for when you're looking at how the individual firms are licensed and regulated to give advice.
Okay, that's very good, Tracy. So let's put it this right. Let's try to wear the shoes of a consumer, Tracy. So first question I will make, are you able to give advice only to Spanish residents or any client, any resident and non-resident in Spain?
Yes, it's a good question. Post-Brexit, we were allowed to give advice to Spanish residents and UK residents, but after Brexit, you now have to get advice from the country which you are resident in. So if people are UK resident and they're looking to move to Spain and become a Spanish resident, it's absolutely important that you start to seek financial advice in Spain prior to becoming a Spanish resident. And I'll just cover that off very briefly. What you'll find as soon as you become a Spanish resident is your UK products, and particularly your UK financial advisor, will no longer be permitted to give you any financial advice. So it's important that you start to build a relationship in those early stages when you are in the process of moving to Spain with a financial advisor based in Spain. But prior to that, there's certain assets that you might also want to liquidate and wrap up whilst you are a UK resident. I'll give you some really simple examples of that. A UK resident is entitled to 25% tax-free lump sum from their pension. So if you're turning 55, you're just about to take your pension, but you move to Spain and become a Spanish resident prior to accessing your pension. What you're going to find is that as a Spanish resident, you're no longer entitled to that tax-free lump sum. So if you had got advice prior to becoming a Spanish resident, certainly if you had come to me, one of the first things I would look at is, have you utilised all of your tax advantages as a UK resident? Have you taken your 25% pension commencement lump sum, which is tax-free? If you haven't, take it while you're a UK resident. Also ISAs, things like that, making sure that you've liquidated those ISAs whilst you're a UK resident, so therefore you don't have to pay any capital gains tax, because as soon as you step foot in Spain and you go through the system correctly, becoming a resident, getting your non-lucrative visa or your golden visa here, and then become Spanish tax resident, you lose the right to certain tax products that you had in the UK. So always, if you are in the process of moving over, prior to becoming a resident, seek some local Spanish Spanish financial advice from a firm such as Chorus, who can help you with that planning. But
okay, thank you.
Just to answer your question, no, we can only advise people in Europe. So whether that's in Spain or France, and we have our UK offices which have UK-based advisors which can advise. So that's quite handy for people who are in Spain at the moment but looking to move back. They can stay with our company, for example, but the advice would be coming from a UK-based advisor.
Tracy, another question. Right, let's say I'm American, but resident in Spain. Are you able to provide and give advice to these citizens or third country nationals? Yes?
Yes. So we have some American clients. It's more about the products we use. So the products are very, very specific to Spanish tax residents. So they're tax efficient for Spanish residents. Where you've actually come from, it doesn't typically matter. As you know, we are an English-speaking company. We do have some Spanish-speaking staff, but essentially all of the products that we provide are in written English. So it's important that people have a good basic understanding of the English language, because of the product providers and where and how their literature is placed. But no, we can help all different nationalities. I've got a good understanding of the American system, FATCA, 401k pensions, etc. So yeah, we can advise Americans.
Okay, but the only requirement for a financial advisor here, such as yourself, will be that we all need to be fiscal resident in Spain. Correct, Tracy?
Yeah, absolutely correct.
Okay, right. Let's say then I'm a fiscal resident in Spain. I want to invest 100,000 euros. And obviously, I'm approached by many advisors, as you know. Bank might approach you, and different many. What are the type of questions that we should make because obviously I understand that the first thing as lawyers will make is, who do I have the relationship with? So do I normally sign two contracts? Do I sign a contract with the provider and one with the agent? Could you please give us a little bit of light on how it works?
Yeah, of course. So 100,000 euros, looking for investment advice. Well, first of all, you need to understand, as I've covered briefly, how the individual firm is regulated. Now, Financial advisory firms in Spain and in the UK typically are part of a bigger network because it's just not cost effective to be able to come directly regulated. For example, if I wanted to be a MiFID II regulated entity, I would need probably a team of 10, 3 directors and compliance team, money laundering officers, and the list is endless. So it's not cost effective. So we typically will be part of a bigger network who offers all of that facility to us. So it's understanding how the company is structured and the individual financial advisory firm like Chorus, what network are they part of and how is that network regulated? And your advisor should be quite clear and quite be able to answer those questions quite easily. Do your research, do independent research on the company. It's always key. Make sure that you can go onto the registers and see them listed on there. Typically what happens, and I'll take Chorus as an example. Chorus are part of IASA. Financial planning is the UK arm, IASA International is the European arm. And they are the people listed on the CNMV and the DGS, and they are the people that hold the MiFID II license. And essentially, us at Chorus, we are a brand that we have created here, and that represents our company and the financial advice we give. But all of our compliance and regulation is through our network. So it's really important you dig deep and you understand how the structure of the firm works. So you have €100,000 and you go for financial advice. You've understood the regulation, as I've said. The next comes really the products that they're offering. So you need to understand that the products that you're offering, you have a good understanding of those, and also the charges involved, because you could come to Chorus and be charged one price, and you could go down the road to Joe Blogg's financial advisors and be charged a completely different price for the exact same product. And that's because in Spain, there's the commission model within financial services is still active and it is still available. And Chorus writes quite heavily about this because I think this is one of the key areas where financial advice goes wrong in Spain. We've seen it time and time again. When there is a commission being paid on a product, typically the investor, i.e. the client, won't see how much is being paid to the financial advisor or the bank even, because it works in the same way. And that lack of transparency leads to high level of commissions being taken in day one from the financial advisor or from the bank. And when I say high levels, I could be talking anything 8, 10, 12% for initial investments. So if you go back to your original example of 100,000, that could be 12,000 euros paid to the bank or financial advisor in day one for setting that investment up. And the individual will never know that because it's a commission and legally it doesn't have to be disclosed. However, over time, what the client will find themselves in is a product which they're tied to for 5, 8 or 10 years. And they might be paying quite high charges for this product, really, really high, to the extent where they're not really seeing much returns because the returns are just covering their fees. What I'm trying to address here and give you an example of is if you go into a commission paying product, you'll typically be tied in for a number of years. So it's really important that you understand right from those early days when you're getting financial advice, how is the individual remunerated? Because there's no such thing as free advice. There's no such thing as we do not charge an initial fee, because the amount of work and regulation and costs involved to actually giving financial advice, there is, it wouldn't be viable for a company never to take any sort of payment for that initial advice. So the way Chorus work is we offer a fee-based system. A client will come to us with 100,000 and we will advise them in that very first meeting. For this advice, if you go ahead with us, we will charge you X%. And that could range anything from 0.5% up to 3%, depending on the level of investment. Obviously, somebody coming to us with $1 million isn't going to be charged 3%, whereas somebody coming to us with 50,000 or 100, we might charge 3%. So it's fair, it's transparent, and it's fair. And we can look our clients in the eye and say to them, our initial advice is this amount. And then ongoing, we will charge you X amount per year to look after you. Fully transparent. The client knows exactly what they're paying us. that not only makes it fair to the client, but it makes us accountable, that client knows what they're paying us and therefore what we are responsible for and what level of service they expect from us. So,
Tracy, sorry to interrupt. Do they sign a contract with you directly as a financial advisor with the company, or do they sign a contract with the provider, or do they sign 3 contracts just to understand the relationship between consumer and advisor and provider? How does it work?
So in the initial stages, before you sign any contract, you need to be very clear about all the fees, because you need to make a judged decision and you need to gather your facts, and you may go and see 3 financial advisory firms. So it's really understand that you aren't given fees and charges at the point of signing. You're giving them prior to that, so you can go away and take that information with you and compare it to other financial advisory firms. Once you've made a decision and you've decided to go with a particular advisory firm, you would sign what's called terms of business with the regulated entity. So again, back to us, back to Chorus, our network is IASA, and you would have a terms of business through IASA, which refers to Chorus throughout, and you would sign that. And within that, it would tell you exactly how we're regulated, what you'd ever need to do if you ever had a complaint, how we're remunerated, how we don't handle client money, how we're independent, etc., etc. The terms of business won't ever mention fees. The suitability report, which is a regulatory letter that the financial advisor will write, which outlines, this is your position, Mr. Client, these are your financial objectives, and this is my recommendation. And my recommendation, I'm recommending this product, and these are the charges associated with this product. And this is our initial fee, and this is our ongoing fee. And every fee would be documented as a percentage and in euros, pounds and pence, however, whatever currency is being used. And that is a regulatory requirement. Now, some regulators would make sure, for example, the MiFID II license that we hold would ensure that we are giving clients thorough, transparent costing in our suitability report. So when I refer to pounds and pence, that's what we would need to document. Unfortunately, regulations such as the IDD licenses and how some financial advisors are regulated don't require for that to be documented. So it's important that you ask those questions and you get that put in writing if it isn't in that suitability report. So you sign a contract with the network. You also would sign the suitability report, which would outline the advice and the fees. And then essentially you would sign a contract with the product provider themselves. So a really easy example of that would be Prudential. So you would provide an application form to the financial company who are providing the actual product, and you would sign that, and you would sign to their conditions on the application process.
Okay.
All of the products have a 30-day period as well, calling off period. So once you've signed up, you would then have your policy documents from that product given to you, and you would then also have a 30-day calling off period, which you could cancel the investment.
Tracy, is it everything done face-to-face, or clients we could just organize a video conference with you and do on an email? Because when I go to the bank, you know, there is certain things that they require my presence, especially, let's say, out of these 100,000 euros, I want to take 10,000 euros. So I will have to pop into the bank, make a petition, sign it personally. How does it work with financial advisors like you, or how does it work, if you could say?
So we only work on a non-discretionary basis. And what that means essentially is that anything that we do has to be authorised by the client, and that's really important. So whether that's we make a change to the investment portfolio or the client wants to make a withdrawal, it's a two-way authorisation process, and the client either needs to sign a document or they would need to securely log onto their platform or investment provider and authorise it securely. So we only work on a non-discretionary basis. You can have a relationship with your financial advisor where you have a discretionary, where you give them a discretionary authorization. in which case that would typically mean that they are allowed to make changes to your investment portfolio without your authorization. But at Chorus, we have the license to do that, but we don't. We typically work on a non-discretionary. So that would require usually a scanned signature. So going back to us being able to give advice across the whole of Spain remotely, product providers are much more willing now to accept scanned documents of signatures. So the client doesn't have to physically meet me in person to sign documents. We use all sorts of secure software now, such as DocuSign and Adobe Sign, to do that. The world is evolving. That's one thing we've got COVID to be thankful for.
Right, Pedro, just happy for you to join in with any possible questions. I'm just trying to wear the shoes of any client and trying just to get all these clear. I had another question for Tracy later on. If I invested that 100,000 euros, I know nothing is guaranteed in life, but as you're registered on the CMNV, I know funds are, for example, are guaranteed. For example, we've been handling a lot of cases against banks for, I don't know if you remember from the preferral shares, Bankia, and then the ground floor clause, etc., etc. Well, to be honest, I should say that even though we went through all these kind of litigation nightmare, pretty much Spain did respond. You know, banks did pay back. They even pay legal fees, etc., etc. For example, as I said, Tracy, if I invest 100,000 euros with one of the products that you might provide, and by any reason this goes wrong, do you state in the contract in case of litigation anything, or does your provider mentions the security up to the 100,000 euros, for example? You know, in Spain it's up to 100,000 euros per bank. Do you have anything with the regulator like this?
Yeah, so when it comes to investing, and let's just say we invested in a product provider, it could be Prudential, it could be Quilter International, and let's say something happened to the product provider themselves and where the protection lies. Well, essentially, the client uses a product provider to access the market. And I always almost say, imagine a platform and the client sits here and the investments sit here, and the platform what allows the client to hold their investments. And if that platform went bump, okay, essentially the client's money is still invested and the client is still has the benefit of those investments. So the middleman, if anything happened to it, actually the money is invested in the markets, not held by the middleman. So in that scenario, the client's money would continue to be invested in the market, and the risk, actually, the financial risk is the market risk, not actually the middleman or the product provider, because they aren't holding client money. They are just instructing the investments as per our advice. So when you invest in bonds, equities, etc. And the real risk is whether the FTSE 100 and the UK equity market is in a positive territory or negative territory. So it's about worldwide equities. The biggest risk when you invest is market risk, and that's absolutely key. So then we look at, well, what if you were given bad advice, or what if the product wasn't correct? Well, there's then two different scenarios. If you're given bad advice, then that comes to me and my network and how we're regulated, and that would be the path to how you'd complain and who you'd complain to. So I'll go back to the terms of business document that we provide our clients with. In there is a whole section of, if you was ever unhappy with the advice that you received from Chorus, from Tracy, then this would be the process. And you would go to the regulator that we were, that our license was through. So in our situation, it's the Czech National Bank. You would go through to them and you would follow through their complaints process. If, for example, you were unhappy with the provider, a lot of the product providers we use are based out of Ireland, just because it's a central hub, it's UK English speaking. So it would be the Central Bank of Ireland, which would offer the regulation on the products. So you've got the products, you've got the advice, and then you've got the market risk. There's 3 different things there. We aren't in a world where a bank would go bust and you would lose your capital because it was with a bank, because actually your capital is invested directly in the markets.
Okay.
Okay.
Pedro, would you like to add anything here?
Okay, well, I guess we'd like to just to add some legal tips according to what the resolutions in Spain and regarding this specific information that should be given or how to conduct from banks or financial institutions to client. I have taken some let's say paragraphs from some resolutions. The one I probably understood it was more important, and basically, obviously, I'm going to emphasize what has been said by Tracy, and which I'm listening very, very deep, and I'm learning a lot. But basically, what the resolutions according to how the financial banks should be acting with the consumers says the following paragraphs. This has been said by judges in the court, in the Supreme Court. So the banks or financial institutions should conduct diligently and transparently, again this word transparent, in the interests of the clients and in defense of the integrity of the market. Instead, should conduct in an orderly and prudent manner, looking after the interests of the client as if it were their own, and ensure that they have all the necessary information about their clients and keep them adequately informed at all times. This is extremely important. Tracy has already said about that. Needs to know what knowledge, what capability has the client, what information about the client, what is experience on financial investments has the client, in order to adequate the product into that specific client. So what it says really, according to these regulations, this is what it says literally: the information given by a financial institution must be clear, correct, precise, sufficient, and with express emphasis on the risk involved in each transaction, especially in high-risk financial products, so that the customer knows precisely the effects of the transaction he or she is contracting. It's extremely important about be clear, correct, again about the word transparent, precise, but especially also with high-risk financial products. And also some other resolutions make like some points which I will briefly and literally is being translated into English by me, which says institutions shall request from their customers, from clients, the information necessary for the correct identification, as well as information on the financial situation, investment experience, investment objectives, when it's relevant to the service to be provided. Again, the courts, the resolutions in Spain understand that, okay, well, you are a customer, you're a client, I would like to know which is your experience, I would like to know which is your knowledge about financial product, in order to be able to understand what I'm going to offer to you and if you understand it or not. And this needs to be clear. Institutions shall offer and provide to the clients with all the information available to them where it may be relevant to their investment decisions, and shall devote adequate time and attention to each client in order to find the most appropriate products and services for their objectives. Again, it's about the transparency, clear, but also the timing, not to be like urgent things, do it now, do it today, because without tomorrow will not be happening. These situations also needs to be with calm, with the decision needs to be taken in this kind of scenarios. The information to clients must be, again, it says the word clear, correct, precise, efficient, and delivered in time to avoid misinterpretation and emphasizing the risk involved in each transaction. And then any forecast or prediction must be reasonably justified and accompanied by the necessary explanations to avoid any misunderstanding. Okay, and more things that is being said by some resolutions in Spain. Institutions must inform the customer, the clients, as promptly as possible if there is any incident relating to the transaction, and also seeking further instruction if necessary in the client's interest. And clients must be aware of any financial or other links between the institution, financial institutions, and any other institution that may act as intermediation, counterparties. And just to finalize, another resolution says, institutions providing advice to the client shall behave fairly, professionally, and impartially in the preparations of, obviously to the service, the advice, and the reports that is going to be made to the clients, and to disclose to clients any relevant economic or any other type of relationship that exists or that is to be established between them and the providers of the product of which they provide advice. Well, there are a lot of information about this, but always everything goes into making circles again about transparency, clear, to be precise on information, what is the knowledge of the client, what is being offered to this client, and how is this being explained and has been understood, and which is the position of the client. There are some tests. At this time, if you, whenever you contract a financial product, obviously you are made as a test in order to understand which is your experience, which is very helpful. But obviously, at the end, everything, all of this goes into like consumers' rights, Consumers Act, in order to be protected according to the Spanish law. But Ignacio, this is mainly more or less what some resolutions. Obviously, there are a lot more information regarding when the clients as a customer has a product, has some protection, has a protection into Spain. So obviously, even though all this information is given by the financial institutions, and we are experienced, for example, with banks that they tell you, okay, yes, I'm here, and at the end you don't have time to read, There's like 20 pages, and this shouldn't be like that, and should be like everything well explained and understood, and now which is the risk in case, as I said, it's a high risk. You should be precisely informed about what should be a risk, and and all this should be in the package of whenever a financial entity offers you a service.
I'll just
okay. Thank you, Pedro. Yeah, over to Tracy. Yeah.
Expand on that as well. So there is something called a key investor information document, and when you invest, we know it as abbreviated to KID document in the industry, and this was brought on by PRIIPs regulation, and it's a requirement that for each investment that you are going into, you receive this standardized document. Okay, and I think that's what you were referring to there, Pedro. It's a document that allows for a certain set information to be provided in a clear manner and a consistent manner across all products. Okay, so that's really important. Key investor information document when you're getting financial advice. So what does it include? Well, it includes a little bit of commentary on the actual investment fund that you're going into, or the product. It shows you the last 5 years history of the performance of an investment. It also shows all of the charges. So sometimes we might refer to a fund charge, but actually it's the ongoing charge ratio on that fund that's really important. And it has other regulatory details in there as well. So it's a standardized regulatory requirement that you are presented with a key information document. Now, I'm confusing myself sometimes because there's this document for that, there's that document for that, and it can be really confusing, and I completely understand that. It's really important that you feel comfortable and you walk through the process with your financial advisor and you understand each step. But essentially, it all comes down to what are you paying for that financial advice? Going back to what Pedro was saying also about the client's experience in investment. So we have to categorize our clients, and we go through quite a thorough risk assessment with them to understand how experienced are you as an investor. You know, have you just had deposit accounts in the past, or maybe NS&I products and you have no investment experience? Well, for me, I need to ensure that whatever I put my client in, you know, is very, very simple to understand, so that they walk away knowing exactly what they're going into. Making sure that, because they might not have as much investment experience as my next client, that they understand that the markets can go up as well as down, and there is risk involved, and that they understand and are comfortable with taking that risk. So we look at client categorization. How experienced are they? What their objectives are, what their age is, because, you know, if you're becoming to the end of your life, you're not going to want to take big risks or be invested for 5, 10 years, etc. And when we invest, we are investing for the medium to long term. So I'm not now talking about being tied up for any period of time, but actually to be exposed to the markets and invested, you know, 3 to 5 years minimum, because there are going to be market highs and there are going to be market lows, but actually over the long term, that short term volatility can be ironed out. So when an investor comes to me, it's really important that, although they're not tied into a product for 5 or 10 years, that actually their intention is to be invested, because they will be able to ride out those short term volatilities within the market. We risk questionnaire them, we understand what their risk is, we discuss that with them, i.e., okay, from all the questions I've asked you, this risk questionnaire has brought you out as a growth investor. Would you say that's correct? And our clients then have the opportunity to say, well, maybe I've answered them as a growth investor, but I see myself more of a balanced investor, and we downgrade them to a balanced investor. So the discussions around risk are absolutely key here, as you've pointed out, Pedro. They need to understand what they're getting into, they need to understand the risk involved, and it needs to be appropriate as well to their risk.
Thank you very much, Tracy and Pedro. Carry on with the program that we have. Obviously, Tracy, I understand that with 100,000 euros, you help us to select the kind of funds that are more conservative or probably more high risk. You provide the documents, the contracts, and I understand from what you said that will be different contracts with one and the others. Okay. I'm always very curious just to know and understand here responsibility, insurance, and guarantees, because we all need to understand, in a worst case scenario, for example, ourselves, when we just advise clients and we are representing them through the courts, or they have an issue through the tax office or whatever, we always look into everything, saying case A, option A, option B, option C. And you always have a real picture of a possibility. I know we don't want a worst case scenario, but we need to understand it, you know, so everything is on the table. With regards to that, Tracy, let's talk a little bit about that responsibility or insurance, because we've got here some in the forum, a little bit. For example, we've got, let's say, I invest 200,000 with Tracy, and say 50,000 of the funds are based in Malta or Cyprus and default. What protection do I have? In the UK, the Financial Services Compensation Scheme will cover £85,000. Does the EU regulator offer something similar? And we're talking back again here, Tracy, on what kind of insurance or protection and guarantees. Let's always think a worst case scenario. Okay, Tracy, thank you.
So we don't hold ever any client money. That's absolutely key. When we give investment advice, we are advising the client to move their money into a product, which is a regulated product, which is typically tax efficient for Spanish residents. So I'm going to use an example of Prudential just because it's a really well-known product provider. Your 200,000 would get moved from your bank account in the UK or Spain directly into the Prudential's bank account, and that would then be allocated to your policy, and your policy would go live. Now, going back to the question, there would be no funds based in Malta or Cyprus. For example, the Pru is based out of Ireland, so it would be the Central Bank of Ireland which would regulate the product. But your 200,000 would then go directly into the investments as per Prudential's products, okay? So they, for example, have a cautious product, which has a heavy amount of fixed interest securities, which is safer vehicles such as bonds and gilts, etc. So your investment would go from your bank account in the UK or Spain into into the Prudential's bank, and it would then get invested. There is no, if anything then happened to Pru, your money is still invested, and it goes back to this middleman scenario. The Prudential are covered by the Central Bank of Ireland in terms of how they're regulated, so they will be policed, if you like, and made sure that they're doing everything correctly by the Central Bank of Ireland. But essentially your money is invested. If the markets do well, your money is going to go up. And if they do badly, your money is going to go down. And that's the market risk. And that's the biggest risk to your money when you make an investment. And look, let's be completely honest, for those experienced investors out there that are are watching this webinar, the markets have had a dreadful start to the year. The US markets are in what we call correction territory. So they are 10% down so far year to date. And if you had have invested on the 1st of January this year, quite typically you would have seen maybe a drop of maybe 6-7% in your original capital value. You would have lost. So your 100 grand would potentially now be worth 92,000. And not because anybody's defaulted or run away with your money, just simply because the markets are down year to date by 10%, certainly the US markets. And you would naturally have felt that in your portfolio if you were an equity investor exposed to global equities. So the protection isn't necessarily valid, because like the £85,000 compensation in the UK, that is more connected to you have cash in a bank and the bank defaults, your cash goes with the bank. This is different. In financial services, your money is invested in the markets, and the middleman, if they default, or if the financial advisor closes their offices and closes business, it's irrelevant because your money is invested.
Mm-hmm. Okay, thank you, Tracy. Tracy, we didn't cover here. So basically, going back to responsibility, I understand, like lawyers, we do have our policy for civil responsibility. I understand you, advisor, will have similar, like civil responsibility as in case of not providing goods, and the provider will have the responsibility with the regulator, correct?
Yeah, well, we all have the responsibility. So our license, our MiFID II license, makes us responsible for ensuring that our advice is clear, ensuring it's transparent, ensure that we provide our clients with all the relative documents, including terms of business, key feature documents, those key investor information documents that I referred to earlier. So we are policed and vetted and audited by the as part of the MiFID II license. So we have a large range of qualifying factors that we have to do when giving advice. And we have to ensure that, of course, the client's interests is put as the main priority and the main focus. And that is actual music to my ears, because so much has happened in the past in financial services in Spain, where actually the individual financial advisor's interests have been put first, and commission has driven them to select certain products or select certain investments for individual clients, and it's driven to actually only good outcomes for the financial advisor in terms of commissions and money, and the client's interests are irrelevant. And the new regulation, and as Spain becomes, you know, closer and tightly regulated, and more financial advisory firms go for this highest level of regulation through MiFID II, then what we're seeing that actually everybody's driven to be able to create the best outcomes for their clients. And for me personally, and I say this to all of my clients, my business plan is quite simple. My business plan is to take on a client and keep them for as long as possible, because actually the value in that client to me is my annual charge to that client. Now, the only reason that client's ever going to stay with me is because they're happy with my initial advice and they're happy with my ongoing advice. I can't control the market, so I wish I could. So I certainly can't make sure that I make them money every year if they're fully exposed to equities, for example. But I can certainly ensure that their portfolios are reflected to market conditions. So when the market's doing well, their portfolios are doing well. And having that interest and having that focus to try and keep my clients for as long as possible means one thing. It means that all I'm trying to do is look after my client. And it completely brings us completely in line, and back to what Pedro said about having the client's best interest at heart and creating the best client outcomes. And it's important, it's absolutely important. And that's why commission is, to me, the dirty word in this industry, and it needs to be removed. It was removed in the UK through RDR, I think 2010, 2011, commission was completely abolished, but it's still here in Spain and it's still rife. And whilst it still is, but some financial advisory firms are motivated by it, and it leads to bad experiences for investors.
Thank you, Tracy. I'm going to ask 2 more questions.
Okay.
One, I'm going to talk about what is the minimum amount we could invest with a financial advisor. That's the one. And second, is if you could just in 1 minute just mention if your products comply with the 720 or not, and Pedro will tell me a little bit about it. Over to you, Tracy.
Good. Okay, so minimum investment. The product provider, Prudential, has a minimum investment of £20,000 or €25,000. But the majority of our providers, really, it's only appropriate for anything over 100,000. So if you wanted just a really simple product, Pru could offer that and a minimum of 20. If you're more of a sophisticated advisor who needs something that offers more in terms of access to the markets, etc., then the minimum would be around about the 100,000 mark. So that answers that question. Modelo 720. So the product providers that we use are all Spanish compliant. People get confused. It doesn't mean to say that they're invested in Spain or that the money's brought to Spain. In fact, clients can keep their money in sterling or US dollars or euros. We offer multi-currency options. They're Spanish compliant in that they comply with Spanish law and European law, and also that they comply with the Spanish tax authorities here. And part of that process means any withdrawals that you take from your investment will automatically have any, we know it as capital gains tax, you guys know it as savings tax, removed from that withdrawal prior to the client receiving it. So that satisfies the taxman here, because he knows that anybody in a Spanish compliant product will automatically have any savings tax or capital gains tax removed at the point of withdrawal. So whilst the investment's within the product itself, and if you're not withdrawing, then it's allowed to grow, we call tax deferred. So it grows and grows and grows without having any tax removed. And then tax is removed at point of withdrawal. And let's say a really simple scenario, you take £1,000 withdrawal out of your investment, 10% of it is growth. Therefore, £100 is exposed to Spanish savings tax, and it would be taxed and withheld that 20% or however much on that £100 would be withheld, sent to the Spanish tax hacienda, and that client would receive an annual certificate to say, this is your product, this is how much withdrawals you took out, and this is how much we withheld and sent to the Spanish tax authorities. So they comply in that they pay all the tax that's due. The second stage is they report this product, okay? They report it into the hacienda, not on a Modelo 720. You might know the answer to this. It's called a Modelo something else. So they have a fiscal rep. So let's refer to Pru. Prudential have got a fiscal rep here reporting every single one of their policyholders into the hacienda. And so it can fulfill the Modelo 720 requirement.
Okay, so that basically, Pedro, could you explain in just 2 minutes, please, what is Modelo 720? I did post here an article about it. Could you explain what it is? And obviously, if it doesn't affect this product, how does it work? Because the product that Tracy is a Spanish compliant bond, that means they're being taxed here in Spain, but taxing doesn't mean that you don't need to do the income tax return. You need to balance out later on. Pedro, could you give us a little bit of, in 2 minutes, please?
Well, I mean, basically the Modelo 720, even though we're waiting, and we expect that tomorrow, because today is the 26th, I didn't realize, but tomorrow is the 27th, and we expect a resolution by the European Court according to this specific Modelo submission of 720, which means that this Modelo is when someone becomes resident in Spain, or is a resident in Spain when this act started, and you have assets abroad, which bank accounts, investments, or property, each one of these pillars is over 50,000 euros price, 50,000 euros value. And well, the value is another discussion, but in properties, when you acquire them, the investments into the 31st of December, bank accounts, or the average quarter, latest quarter of the year, previous year, or bank accounts on the 31st of December. If the assets abroad Spain is more than 50,000 euros, then you need to inform tax office in Spain through this Modelo 720, submission of the 720, informing a specific the bank account, which is the bank, which is the amount, the address. I mean, there's some information that needs to be given to tax authorities as they do now. So it's extremely important when someone, for example, became last year resident in Spain, and if he became last year in the first semester of the year 2021, from 1st of January to 30th of June, then it's a presumption that it took more than 183 days in Spain last year, so it was tax resident. So this year, from 1st of January to 31st of March, so we are right now on that period of time, should be submitting the Modelo 720 if has in value more than 50,000 euros on savings in bank accounts, or more than 50,000 euros on value on investments, on ISA, on, I mean, all these kind of products, which is an investment or shares, and also a property abroad Spain, which the acquisition value was more than 50,000 euros. If last year in 2021, whoever applied for residency and obtained residency in the second semester of the year, from the 1st of July to the 31st of December, it is a presumption that didn't take more than 183 days last year in Spain, so it's considered for tax purposes as non-resident. So the timing in order to make this Model 720 will be in the following year. So because this year will be tax resident, because this year will spend more than 183 days rule. This is one of the basic rules in Spain, according to be or not to be tax resident in Spain. And then will be the following year. Important for those who were in 2021 tax residents, or spent more than 180 days in Spain last year. This year, they have to submit a Model 720 with these conditions I've said. And in mid-April, May, June, we'll have to make also the tax return about your worldwide income in Spain, according to the double taxation treaties between Spain and your home country. But it's important to obviously to understand what needs to be included in the Modelo 720 and what shouldn't be included or is not necessary. It is an informative declaration. You don't pay taxes because of that. It's just to inform. Because tax office wants to know what you have abroad, and if you may, in the future, with your tax declaration, with your tax return, you may include some income of that. Important that at the end, these products that you are able to have access to that and withdraw it. So pension funds will not be included, okay? And those who have already been informed to tax office shouldn't be included, but I would like to specify that it's important to check if this is already informed by tax office according to the submission of the 720, because it has some specific information about the entity, the bank account and everything, and which is not by some other forms. So it's important to check if it's necessary to be done or not. Briefly, Ignacio, this is the 720 information, but it's important. We are waiting for tomorrow. Let's hope that tomorrow we have good news. because this Modelo 720, this submission, it has a tremendous and threatened fines to those who has not done it correctly, or has not done it, or is still pending to be done on a delay in time. And basically, there are from it's difficult to explain, but it's from, if you voluntarily do it, will be 1,000 euro, 1,500 euros minimum, plus around 1,000 euros each item that needs to be included, which could be a lot of money. But if the tax office requires you to do it because you haven't done it, that you should have done it, will be 5,000 euros minimum, and then another enormous amount in order to sorry,
Pedro, we're running out of time.
Euros. Okay.
We're running out of time.
Well, I'm just finalizing with that. Yes, that is finalized. Let's wait until tomorrow. We have better news, and let's hope that these fines are eliminated. And even though the submission, I understand that should be, will be maintained in the future to be done.
Okay, thank you, Pedro. Just basically, Tracy, just there is more questions here. Very, I know they're not simple questions. Is there any similar protection in Spain as in the UK via the FSCS and FOST? This is one. And the other one that obviously is the one that everybody obviously loves is, what is the best tax-free way of investing, saving with the safest and guarantee return? I know they are very, very difficult ones, but I leave it to you, Tracy. And if you could be brief, I will be grateful.
Okay, so the Financial Ombudsman Service, which covers the advice in the UK and offers compensation, it is all through the MiFID license, and it's about the home regulator of the financial advisory firm. So it differs. So if a financial advisor is regulated out of Malta, Cyprus, Czech Republic, etc., it's indirect to the home regulator to answer that question. So it does differ. Tax-free, no, there's no such thing as an ISA, a HIA. The closest thing we have is the Spanish compliant products, which allow for gross roll-up, which means that essentially the investments within the product can grow free of any tax, and the tax is deferred at point of withdrawal, and that's the closest we get. But that, it does offer tax efficiencies, and it does allow people to invest over longer periods of time without having to make annual tax returns and pay any capital gains.
Okay, thank you very much, Tracy. I'm sorry we could not cover everything. I would like to just thank Pedro and Tracy for their time. I would like to thank the audience as well for their time. I, as Pedro insisted and I insisted, always seek independent financial advice, try to make questions, try to understand products, try to understand everything. And if you don't understand, just don't sign it. Just discuss it with your solicitor. I will say that we are as well fully independent lawyers. We're not tied in with anyone, no banks, no financial advisors. We're here to help clients. So if after you do all these questions to Tracy or anyone, you still need an opinion from us from a more technical point of view, please come here. And that's the reason why we are holding these webinars, is to give you information about you and the law in Spain. Again, thank you, Tracy, for your time, Pedro and Juanfran. I will be seeing you in 2 weeks on our next webinar about 720, as Pedro insisted today. I hope we have good news.
Hope so.
See you soon.
Thank you, Tracy.
All the way.
Thank you, Ignacio.
And Juanfran will share with you now the very latest video, and see you soon. Thank you.
Trust is vital when you're in another country. If you want to buy a home, set up business relationships, or apply for a residence permit, you need to be able to count on the best independent legal aid. Pellicer and Heredia is an international firm of lawyers with over 20 years experience and one single aim: for you to live at ease in Spain. In order to give you a clear, streamlined, and fast response, we work with a cross-disciplinary team of professionals specializing in the main legal fields: civil law, foreigners' affairs, business law, tax and financial law, and international law. And to ensure that you're kept informed and up to date with everything, we have 6 offices on the Eastern Coast. Whether you're from here or abroad, we will always stand by you and speak your language. Our relationship is based on openness, professionalism, and a commitment to finding legal solutions in your best interests and for your peace of mind. Pellicer and Heredia, international lawyers.